Hi, welcome to Retire Wealthy. My name's Craig O'Rourke, and I created this channel to help people navigate what I think is one of the most important choices we can make in life, and that's how to handle our finances for retirement. We all want the same things when it comes to retirement. We all want safe, secure, dependable cash flow, money we can count on month after month, year after year, decade after decade. So on this first program, we're going to talk about what I like about income producing real estate and why I think it's really the best place to invest the majority of your retirement income. And on future shows, we'll be bringing in guests that will talk about the stock market, talk about all kinds of different other avenues, so you can decide for yourself which is best. But let's start with real estate. The reason I like real estate so well, and it's a very simple premise, is that it is an asset that doesn't have to be depleted when you start taking money out for retirement. What do I mean by that? Well, with most types of investments, let's take stocks, bonds, mutual funds. That's what most people invest in. And it's a great investment, and there's a lot of reasons to invest in that over real estate and a lot of reasons to invest in real estate over that. We'll talk about all that as the program goes on. But in a nutshell, the reason I like real estate so much better than maybe stocks, bonds, and mutual funds is that when you invest in stocks, bonds, mutual funds, anything like that, the asset itself, when you get ready to retire, needs to be liquidated. In order to fund your retirement, bits and pieces of your stock portfolio, your bonds, your mutual funds, they all need to get sold off every single month to put money in your pocket. This is the first place I like real estate investing better than most other investments. You see, the reason is real estate, unlike other types of investments, you don't have to touch your asset. Your asset is the real estate itself. It's the property you own. Let's say you have an apartment building, right? In order to fund your retirement, if you've planned it right, you don't have to sell that building to do it. What you do is you start taking proceeds from the incoming rents. And that's the beauty of real estate. You see, those incoming rents, they never end. Those tenant dollars come in month after month, year after year, decade after decade to continue funding your retirement. Now, on the other hand, with the stocks, bonds, and mutual funds, those need to get sold off. So at some point in time, that well runs dry. Have you ever heard about the rule of 25? It's very simple. A lot of investment professionals use it, and it has some wisdom behind it. What the rule of 25 says is that most people, by the time they retire, will probably live 25 more years. So let's say for fun, you retire at 60 and you're anticipated to live to 85. Okay, that seems fairly reasonable, right? So your stocks, bonds, mutual fund portfolio is designed to have enough money by the time you retire to allow you 25 years of living expenses. Seems reasonable. What happens if you live to 86 or 90 or 95? Or 98 like my mother, or 101 like her twin sister? What happens if you outlive your money? That's a scary thought, isn't it? So that's why I like real estate. Those incoming tenant dollars are always coming in. They're always feeding more cash into your retirement portfolio. So you should never run out of money. And the beautiful part is your asset, the piece of real estate itself, is left untouched. So it can continue to grow in value with market appreciation, unlike your stock portfolio that is constantly decreasing in value. That's the main thing that I really like about real estate. But there's other aspects of it too that I like. There's tons of tax advantages. We have what's called an IRS 1031, which allows you to move assets from one investment property to another and defer your taxes for a very long time, in some cases for the rest of your life. Now, those are complicated things, and you need to get an accommodator and probably have a CPA to advise you on all of that. But that's just one tax advantage. You also have write-offs, you have deductions, you have so many other opportunities in real estate. Leveraging is a great opportunity that's real estate investors use all the time. What is leveraging? Well, if you go to buy if you ever bought a piece of real estate, you probably leveraged it. So what do I mean by that? You probably got a loan, right? So if you bought a property for $1 million, you probably had to put $200,000 down. You leveraged $800,000. Well, while you own that property, all the equity you gained off that property, came not just from the $200,000 investment you made, but from the full million. You see, that's the beauty of real estate. You can leverage it. You can control $1 million worth of assets for $200,000. Now, this is a very simplified version of how leveraging works. When you get to investors and leveraging, it's very different for investors, right? It has to do with cash flow. It has to do with a lot of different aspects. But done properly, leveraging can greatly increase the value of your retirement portfolio in a short amount of time. So these are just a few of the many aspects of real estate investing that I really like. Do you know what the world's most valuable asset is? It's real estate. At last count, the value of real estate in the world was $228 trillion. How many zeros is that? I don't even know. And that is 12 times the GDP of the United States. Think about that. The value of real estate worldwide is 12 times the GDP of the United States. That's a huge number, right? They're mind-boggling. So that just speaks to what a great investment real estate is. That's where people put their money. They put it in real estate. So if real estate is such a great investment, why isn't everyone doing it? I've got two answers for you. The first answer is it's a lot of work. Unlike stock market investing, you simply write a check to your stockbroker every month, and you maybe are talking to him or her about various options or something like that. And a lot of times people just let their stockbroker handle it and give them the check, and that's it. With real estate, it's different. With real estate, you're running a business and you have to treat it as such. So there is a work element that a lot of retirees just don't want to have anything to do with. Well, there's a workaround for that. It's called property management, right? But you will be involved at some level, much more than other types of investments. So that work aspect is the first reason a lot of people don't invest in real estate. But the second reason, the bigger reason, is fear. You see, what I've found over the years working with real estate investors for almost 40 years is they're afraid of buying income producing real estate for a lot of reasons. And some of them are really valid reasons. So let's talk about those. Okay, let's start with the first fear. It's money, right? Everybody says the same thing when I talk to a first-time investor. I'd love to invest in real estate, but it's so much money. Where am I going to get that much money? Well, it is a lot of money, but there are ways in which individual investors can invest. You have to be a little creative sometimes because it can cost a lot of money. It's not like writing a check for a couple $100s to your stockbroker every month just to throw a little money in the pot. It's not like that. You have to have the down payment, and you have to have a good credit score, and you have to make sure that you have enough in reserves. There's a lot of different dollars that come in up front before you even buy real estate that you have to be concerned about. So when I first became a real estate investor, I didn't have a lot of money at all. I barely had any money. But I got together with two partners, and we each pooled $5,000. We got $15,000 together. We bought a little one-bedroom house, a little fixer. We fixed it up and held on to it for a while, and then flipped it after the market had appreciated for a while. And we turned that into a duplex. And from that duplex, we then flipped it again, and we turned that into an 8-unit building. And then we flipped it again a couple more times. Long story short, by the end of the 2 decades that we had that $5,000 investment, $15,000 total, we turned that into a 7-figure piece of real estate. So it took time. It took energy, it took focus, but it happened. So my first pathway getting into real estate investing was simply by finding like-minded investors and partnering up. That's a great way to do it. Another way to do it, a lot of 401k programs or IRAs, they have different ways that maybe you can utilize that money in order to fund your retirement. The second thing I hear a lot is, I get into real estate, but I'm nervous if I needed to access the equity, I wouldn't be able to do it. That's a huge problem. If you needed fast money, real estate investors can't really access that quickly. Now, yes, you could maybe take a second out on the house or sell it if you had to, but those aren't really good options for long-term investing. So that takes us back to the idea of diversification. That is why I have 80% of my retirement portfolio in real estate, but I have 20% liquid: stocks, bonds, mutual funds, different types of investments like that. So I think if I ever ran into a situation where I needed fast cash, that's where it comes from. And that's just smart planning for anybody. Here's another fear that I get a lot. And people often say, I missed the boat. I missed the bottom of the market. Well, real estate is the most forgiving investment of all time. And what do I mean by that? What I mean by that is there's always another bottom of the market. There's always another high. Real estate's always going like this, up and down, just like the rest of the economy. So when people say to me, oh, I missed the bottom, it's too late, I say to them, listen, investment real estate is different than buying a home. You can maybe have that argument about buying your primary residence, like, oh, I missed the market, I can't get in now. Investment real estate is different. It's a business, and you have to look at it and treat it as such. So I don't worry about the top or the bottom of the market. What I do is I look for a transaction that makes sense. And if something seems too high priced, I simply make an offer that works for me. And you will find that strategy will work. Because the idea of investment real estate is it's based on income and expenses, right? So if you find the right property, it doesn't even really matter if you're buying at what is perceived to be the top of the market or the bottom of the market. It's going to change. And the beautiful part about real estate investing, especially if you invest for the long term, like I like to do, is over time, 5, 10, 15, 20, 30 plus years, your appreciation is going to wipe out any memory of you buying at the bottom or the top of the market. Real estate is the long game. You find an investment that works, you get in and you stay in. That's one of the keys to really being successful in real estate, is you don't ever leave the market. The other one I hear a lot, and this is really very valid as well, real estate's just too much work. So property management. That's the key. If you don't want to be involved, you get a property management. Well, as soon as I say to people, property management, they always say the same thing. It's too expensive. I can't afford it. Really? Well, you shouldn't have to pay more than about 5 to 10% for property management. 5 is becoming more and more the norm, maybe 6 or 7%. You'll negotiate that with your property manager. But a good property manager will actually make you more money. What do I mean by that? A good property manager will stay on top of the market, will keep your units rented, and will make sure that they're rented at market rate, allowing you to go and do whatever you want to do with your retirement instead of turning over new units or serving an eviction notice or worrying what the market value is of your 2-bedroom, 2-bath that's about to become vacant. You don't have to do any of that stuff. The solution to property management is really easy. You simply build in the cost of property management along with your other expenses and determine whether or not the investment makes sense. If it makes sense with a property manager, it's a win-win. If it doesn't make sense, it's not the right property for you. Pretty simple. Here's another one that goes out to my fellow baby boomers. I'm 50 years old. I'm too old to start investing in real estate. Really? Let's talk about that. Because if you do it right, if you invest in a property when you're 50 years old and you get really focused on it, there's no reason why you can't have that property paid off or paid down to a place where it's very profitable in 15 years. Let me tell you this, if you're 50 years old today and you have a property that is cash flowing at 65, that's going to be a really good investment. So don't let timing stop you. Make sure you really look at what you're investing in, how much time you need to get there, and then make that decision. What is true wealth? If you ask 100 people that question, you'll probably get 100 different answers. Let me give you my answer. To me, true wealth is freedom. It's freedom from having to worry about money. It's freedom from having to go to work if I don't want to go to work. You see, if you set up the proper retirement portfolio, you can have that freedom. If you create a portfolio that is sustainable, that gives you money month after month, year after year, decade after decade, without having to worry about that portfolio running out of money ever, that to me is true wealth. If you like this channel, don't forget to hit the subscribe button and give us a thumbs up. You're going to learn a lot here about investing, about creating your own financial freedom.